Do you expect a Bitcoin ETF to get approved anytime soon? And I'm curious if you plan to launch a crypto ETF anytime soon.
I think well, now that Gary Gensler is head of the SEC, he's Bitcoin friendly. We know that. He taught a class, courses at MIT before coming back to the SEC. So, and I think the research professionals at the SEC, they understand Bitcoin in particular, and I think are much more comfortable with it now that we've had several years to digest what exactly it is, go through a bear market, go through a bull market, now go through a bit of a bear market. I think watching the ecosystem evolve and actually become even more anti-fragile. We're getting some real tests here. And if the system doesn't break, and I don't think it will, I think that their comfort will increase in a couple of ways. Number one, the infrastructure is there, is robust. Number two, the liquidity is there. I don't think that's going to be disproven here. And number three, the price is down from very lofty levels. So, hey, why not start an ETF after a correction in the market than before? So I actually think the odds are going up now that we've had this correction. I don't know if it's going to be this year or not. We hear perhaps fourth quarter, but we heard third quarter before that. So as we get closer to the fourth quarter, we'll know how much is being pushed out.
Hey, I want to ask you a little bit more about Tesla. Obviously, you've been out there front and center years ahead when everybody was turning their backs on Tesla, taking another hit. The news out of China, they have certainly had some tough time. Their growth has slowed substantially. They've had a lot of headaches and protests in Shanghai after some accidents with its cars. Is the Chinese market at risk for Tesla?
I think the China is going to favor its local producers like NIO and others, XPeng. And I think they're granting subsidies to NIO, which is the battery swap company, even on its very high-end cars, which they are not granting to Tesla. So it's obvious, and it has always been obvious, that China would favor a local producer. But what we are seeing from China, and particularly Tesla, is exports into Europe. Where it does not yet have a plant. And what we're hearing is especially in Germany, but all over Europe, where their standards are extremely high for cars in terms of design and performance, that they would prefer cars from Shanghai, which is a much newer plant, and much more productive, much more efficient in terms of perfecting these designs than is Fremont. And so I think we're seeing a big export market develop from China into Europe. And I think China will like that. China wants to be known not for shipping or exporting, cheap goods, but also high-end goods. So this could be the beginning of a trend.
So is China at risk then for Tesla? I mean,
I don't think they're going to shut down the factory at all. I think that factory will be used much more for exporting than we once imagined. I will say that Tesla's cars in China have sold very well until very recently. I'm sure the publicity it has received has cooled Tesla's jets in China, but it's been fortuitous that this export market has opened up at the same time.
Cathie, one thing I want to ask you, and we talked about it at the beginning, inflation. Your mentor, you and I talked about this just a few weeks ago, Art Laffer, you were in your 20s, you were focusing on the economy. It was a time where inflation was off the charts and everybody thought it would consistently stay that way. Laffer thought differently, and we know, well known in the supply side economics. Here we are at another time where the markets, the volatility is often guided by our inflation expectations. Is inflation going to be a problem in your view?
Well, we've been saying for some time, actually since the depths of the coronavirus, we were doing YouTube videos saying regularly, V-shaped recovery, businesses are way behind consumers. Consumers are buying all of these goods. In fact, that's all they can do because they're stuck at home, right? So they were buying non-durable and durable goods that could be shipped to them, right?
Right.
non Okay, that part of consumption is 1/3 of consumption, and a disproportionate amount or percentage of the market basket of consumers was in goods for the past year. Businesses didn't expect it. They were behind even before the coronavirus. They had been lagging in terms of capital spending, in terms of inventories. They were worried about inverted yield curves and China-US trade conflict. There were many, many concerns. So they had been dragging their feet. They got even further behind, and still haven't caught up. So what's happening now? Double, triple ordering, maybe quadruple ordering, because they just can't get the goods,
Panic buying.
especially
We've been talking
anything.
about companies panic buying too.
Panic buying. And so what I believe is we are setting up for a massive period of deflation. Now, let me explain that. There are three sources of deflation. One is when the orders, these double and triple orders, are canceled, right? Now, we have seen lumber correct 30% in the last week. I think this is the beginning of that. Copper is now starting to correct. And I believe that commodity prices went too far, too fast as businesses were scrambling and panicking, right? They were losing business to competition if they hadn't planned their inventories correctly. So that's one source of deflation, but that's only cyclical deflation. And we actually didn't expect it to start now. We expected it to start later in the year. But I guess it makes sense now that vaccines are here and consumers are shifting away from goods towards services or at the margin. The writing is on the wall. Those are double and triple orders are going to be canceled. Prices were too high, and we're probably going to see a drop in commodities. But there are two other sources of deflation out there, and this is what we've been saying for quite some time. One has to do with, it's a good deflation. It's caused by technologically enabled innovation. And we believe when you see DNA sequencing costs dropping 40% for every cumulative doubling in genome sequenced, or when you see AI training costs dropping 37 to 50% per year, these are massive deflationary forces that are going to hit every part of the economy. AI is going to be everywhere. So that's good deflation. Now, what's bad deflation? Bad deflation is going to hit those companies that are going to be disintermediated and disrupted by all of the innovation that we talk about all the time, based on DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. So companies who have leveraged up to satisfy short-term oriented shareholders who say, I want my profits now, I want my dividends now, so they buy back their shares, they haven't been investing enough in innovation. They are going to lose, if they're not lucky, if they are unlucky, they will lose their businesses.